Welcome back, guys. It's your boy Rod again with another entry Thursdays in the Forex market here. So in today's video, we're going to be talking about GBP AUD, okay, and how you could take advantage of trading a range. Now, keep in mind, right, I'm going to point out some things in today's video on how to trade a range. It is completely different, and I'll tell you some things that you can't use in a range, because in a range, it's very rangy, as I should say. Not everything works because it's not going according to trend, even though it might not have broken the trend. But while it's ranging, it stays in a periodic area for a time being, and that's the way to trade that area. So without a doubt, we're going to jump right into it. So some of the things I'm pointing out to you guys today on Entry Thursdays is support and resistance. When you're trading a range, you're only supposed to be trading support and resistance. Now, how can you identify a range? You can identify a range, right, by noticing that it's hitting a support and resistance level and not breaking those areas. So the levels that I'm highlighting is areas within the range that this market has touched and has reversed a few times, okay? Now, and I'm gonna get more in detail and more in depth. So when you're trading the range, right, basically you're taking a probability off a support or resistance level. Now, it's hard to use, confluence and have multiple confirmation within a range because it's all over the place. EMAs won't give you anything, and Fibonacci's won't work. So both of those two additional confirmation that you can use, which you'll find more of in my course, you cannot use within a range because it pretty much just crosses it out. It's invalid. You can't use it. And if you do use it, you're going to get wrong projections, and then you're going to get hurt and wonder why you're losing out of the market. You are only supposed to trade support and resistance. So let's jump deeper into it and show you guys some of the things you can look for. So with trading a range, right, as you guys can see here, mainly it doesn't retest. Depending on the pair, you got to get comfortable with the pair that you're trading. It might not retest. It might just break a support level and then just start falling out. Okay, very rarely it does retest. So let's take let's take a look at this example, for instance, whereas let's go down to the lower time frames. You kind of had a little retest here. Let's go down to the more lower time frame. You kind of had a retest here with this long wick, and then it dropped out. But for the most part, as you guys can see here, when it broke this level of support right here, this thing just began to fall down. It did pull back, which this was an entry. You could have taken an entry right as it broke this neckline here. That would be a breakout trade where you just take it as soon as the breakout you're in, and your stop loss would be like somewhere like up here, because right now, you're trading a range, so you don't know exactly where. Now, sometimes, depending on how much you want to risk on your pair, and you have to understand risk management, we're going to measure this out, because I actually didn't take this trade this week. So we're going to take out the risk reward tool. We're going to take a look at it. And let's say we get in somewhere here. This trade would have been a little too risky for me. 60 pips for a potential, which is not bad. For potential, because remember, guys, we're just measuring the zones here, okay? We're measuring not the zones, the range. I'm sorry. You're measuring the range. So if you're risking 50 pips, 60 pips, 65 pips in this range, the possible payout, as you guys can see, would be like 203. So that is really not a bad risk. Me, honestly, I like to risk anywhere between 30 to 50. When you get to like 65, you're really pushing it. Unless you see some additional confirmation and you want to take that trade, you can go for it. But more than likely, if it's past 50, I'll just kind of like wait it out, because that looks a little bit kind of too risky for me to take. You could have taken this based off an engulfing pattern here, and that's just straight up a confident trade, knowing that, hey, it hit this, resistance level a few times. I'm going to take it. As you guys can see, if you taken it here after that, wouldn't be a bad trade. It'll be maybe like a 30, 40 pip risk. So something like that I would have taken. But again, just seeing an engulfing pattern at a level of resistance is enough confirmation for me to be able to risk 50 pips, because it easily could have went the other way. But keep in mind, you're trading a range. So when you're trading a range, you have to have the mindset that, listen, I'm trading in range and it could go against me, but also it could go in my favor, okay? We're also going to look at another example here where you could have gotten in on this area here. Let's go down to the lower time frames here. Whoa. So this one was pretty clean. As you guys can see, this one was a nice entry here on this range. And I don't know if I went over this yet, but I don't think I did. Once this resistance level was broken, as you guys can see, it came back, pulled back. I would have waited, for at least 2 bullish candles and then put my stop loss below that support level right underneath. So let's take out the long position tool. Let's say we get in there and we were risking here, let's say I'm risking like a 30 pip stop loss, give it some breathing room. Normally I would put it down here, but as you guys can see, this is like 70 something pips, and that's without, that's way out of my risk, which I am not about to risk 70 something pips on this range because I know it can get very deadly. So I would just put it right under the newer, lowest point that it created, which, would be, I'd say about a 30 pip stop loss, which isn't too bad. And as you guys can see, this thing actually paid out about 100 pips. So that is not a bad risk. In the moment that you seen this started to consolidate, I probably would have closed my order, because there was a lot of things going on in here and you don't want to be risking it. As you guys can see, it pulled all the way back, touched that same support, which was previously a resistance level, and took off again. So, if you could have possibly understand what was going on, you could have took, advantage of both, both buy opportunities here. And also, once you notice that this level of support right here was broken, you could have got like, a breakout trade here and taken advantage of this sell opportunity also. Me personally, I wouldn't be too much of a fan of taking this trade here because this, again, is a little bit risky, and you're risking a little bit more. Some traders are more conservative, some are more risky. I'm like right in the middle. Sometimes I could be more conservative, sometimes I could be more risky. So it all depends on how I feel that day. And based on the confirmations that I'm getting out of the market, what is telling me to do, or what I can see that could possibly happen. So let's measure this up real quick on a short and see, after this breakout, see again, that's like 50 something pips, and just to gain 75 pips, which isn't bad. It's a 1 to 1.5 ratio, which I really don't trade those because, again, they're very risky. But you could have taken advantage of that. Even if you had gotten in on the lower time frames, let's say, this is what I recently started doing. I started going down on the lower time frames. If I see something like that and I take, a smaller risk, not as large as I normally would, but I do take a smaller risk. Oh, let me see. I got lost. Okay, so let's go down to the 30. Okay. And let's go down to the 15. Whoa. And yeah, if I was supposed to take this trade here, guys, oh snap, let me get that off the screen. Let's pull out the risk to reward tool. We're gonna go short. Probably would have gotten in somewhere here, put the stop loss here. Again, 40 pip risk. Very risky. It wouldn't be potential opportunity to trade until the neckline was broken, which is here. So me personally, I probably wouldn't have taken that trade. But even if I did, I probably would have put stop loss like right above this wick area here, risking about 10 pips just to see if it's going to play out or not. And then, you can take those little risks for breakout trades, but you would have to zoom in on like the 5-minute time frame, correlate in, that this is on a downtrend going down, and put it above your lower high here, which basically is about 10-15 pips to get in on the pullback after the support level was broken. Okay, so thanks again, guys. I run through this real quick to give you a real quick breakdown and analysis of the week and what's going on. A lot of consolidation on GBP AUD. Hopefully it doesn't break this zone here that it's coming to. We can possibly check for a rejection here, or if it does break through, it can retrace a little bit more, okay? So I'll see you guys, next week on another video of Entry Thursdays. On Tuesday, we'll talk a little bit more about Entry Tuesdays and how you could have possibly gotten in, and what to look for, and how to take advantage of these moves that are happening in the market. All right, so continuously check out my Instagram channel, guys. It is growing, and I'm dropping a course very soon. So I hope those that are watching find a lot of value in it, and hopefully could be a part of the growing trading team. That way we can take money and extract it from this market very strategically. Okay, so thanks again for your time, and I'll see you next week. Bye bye.